IVM.
Hi everybody, this is Amit Doshi and I have a request. We'd really appreciate it if you could go to ivmpodcast.com/survey and fill out our survey over there. It's going to take a few minutes to do, but it gives us some really interesting information that we can take to advertisers and brands about who's listening to the network. If you're comfortable giving us your email address, while you're filling out the survey, we'll enter you into a random drawing where we'll be sending out a bunch of IVM swag to some of our listeners. Last year we sent out coffee mugs, and this year we're hoping to send out much cooler stuff. That's ivmpodcast.com/survey. We really appreciate your help.
Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, B50 on Twitter, and today we're talking startups, we're talking ESOPs, we're talking about investors, public markets, private markets, a whole lot of this from the people who are experts on this. So if you're a founder, if you're an investor, if you're an employee at a startup, we just want to know how this massive startup ecosystem works. And when a lot of my guests on Paisa Vaisa have been from startups because they get podcasts, listen right in. My guest today, Shanti Mohan, co-founder and CEO, LetsVenture. Sanjay Jha, co-founder and chief technology officer, LetsVenture. Shanti, Sanjay, welcome to Paisa Vaisa. Thank you so much for doing this for our listeners.
Thank you for having us, Anupam.
Yeah, thank you, Anupam.
Thanks, guys. So let's start with a very brief intro to LetsVenture. What's your short history and how you guys started this and the things that you guys do? Because I had Nimesh Company, but he was from LetsVenture Plus. I want you guys to give a broad overview on LetsVenture, the group company, which I think is slightly older than LV Plus.
So LetsVenture was founded by Sanjay and myself in 2013. And at that point of time, the ecosystem was a bit nascent. So the vision was to ensure that we are building an online marketplace which would make the process of fundraise easy for both founders and for investors. So basically make the process of fundraising, of discovery, and of connecting, syndicating, all of that, right? So whatever goes into the process of fundraising for investors as well as for founders. Over the last 6 years, we have actually helped about 311 startups raise about 120 million on the platform. But about 2 years back, we also realized that there was a very similar problem which family offices faced, where there was information asymmetry, there was price arbitrage. And that's where we have launched LetsVenture Plus, right? So LetsVenture Plus is the growth platform where we then connect founders who are looking for growth funding to family offices, where we are unlocking that alternate capital for growth investing. And we have about today, 200 family offices on the platform. We have about 7,000 angel investors who are investing into the early stage from about 55 countries. We have a team of about 49 people based in Bangalore and Mumbai. But overall, the vision today is to really organize and digitize private markets in India. So looking at early stage, looking at growth, and looking at ESOP liquidity. So those are the three verticals. And we have the My Startup Equity product, which basically helps digitization of data for private markets.
I'm going to get into all of this. Sanjay, do you and Shanti go back to a common origin story?
Not really. Shanti and I met up again back in 2013 when Shanti told me about her idea of building a digital platform for startups. And I was quite excited and I jumped right in. And as you know, the LetsVenture platform for early stage investments, right? I mean, we having a tech platform set us apart. And that is what I was doing while Shanti was managing all the business. I was, in early stages, even coded some of LetsVenture platform code. And later, of course, managed a small team of engineers who built the entire product for LetsVenture.com, our early stage funding platform. And over the last 1 year, I think we'll talk more about it maybe later, is the My Startup Equity platform that we have built. It's a SaaS product for startups to manage the cap table and ESOPs. And not to forget the LetsVenture Plus, which is our platform for ultra HNIs and family offices to invest in growth stage and unicorn startups.
Very interesting. Yeah? I mean, you guys came in 2013 and the entire ecosystem exploded after that. So let's start. See, now, the way that I've understood this when I've had platforms on my podcast or when I'm talking to startup founders or investors, I see two things. Okay, so now you have a startup who needs funding. It has founders who have their own vision, right? And you have investors who want to invest, and their outlook is return on their investment, right? So now I just find that both of them have different visions, and yet they come together for a common goal, which is probably value creation, or to set up something really good for customers. I also feel that somewhere there is some, this kind of a collaboration also has an element of conflict built in. And I've seen that LV, balances out both sides of the equation. I want you guys to give me your views on this. In this last 7 years, how have you seen this equation playing out? Is it there? How does it work? And of course, how is it resolved?
So actually, it is not two different vision, Anupam, right? It is basically the funding becomes the enabler to meet the outcome, and that outcome is to create value for shareholders. And the investor is one of the shareholders, right? So the founders are basically becoming entrepreneurs because they believe that there is a large market they want to address. There is a product they believe will be able to create value in that market, and they are the right team to execute on that vision, right? And the process of fundraise becomes one of the aspects of building the company, right? So we always, tell this to our founders that let capital raise not be the reason why you became an entrepreneur, right? So the money is only an enabler in your journey, where you really want to use the funding at the right time to be able to build value. So from that perspective, I don't see that there is a conflict, right? And once the investor invests into the company, the founder and the investor are sitting on the same side of the table, right? Because on the other side is the competitors and the market, right? So you are not competing with each other, and there is no conflict there. So if you look at the way we thought about this relationship on Let's Venture, right? We today believe that as a platform, we represent our founders, we work for the founders, right? And we protect our investors. And what I mean by saying that is that, when you're building a two-sided marketplace, a lot of times people ask us, who is your customer? Right? And that is actually the real response, is that, we actually work for the founders, because today I believe that as a marketplace, we are bringing in efficiency in the process of fundraise. We are bringing in transparency, right? We are actually bringing in a lot more ease in the way you could connect to a founder. But if you really look at this entire kind of relationship, right? It is about finding the right investor as a founder, right? So as a founder, you want to be focused on building your business, while a platform like Let's Venture should be able to help you fundraise. And as an investor, you should be able to actually go and meet the right companies. You should be able to meet founders with ease, right? You should be able to discover the startups which align to your own domain experience. And at the end of the day, right, investors will go to the platform which has the best founders, right? Because investors don't have loyalty, right? So they will go to anywhere where they are getting the best founder, or the best transaction is being offered to them in a very transparent way. So from that perspective, we don't see a conflict, Anupam. And that has been the ethos of Let's Venture, working within the regulatory framework, protecting our investors in a way that we ensure that every transaction is compliant, is actually based on the current regulation requirement, right? So we have a large team which is actually only looking at this. And we also do due diligence before we do call for money from our investors, right? So we actually do a financial due diligence, a legal due diligence. We have a lead investor who signs off on that due diligence report. Only post that do we call for money.
Okay. Sanjay, you're the CTO. I want to ask you this, because this is, in her intro, Shanti mentioned a couple of things which I found really interesting, which are kind of the bridge between what I just asked and where I'm going the next question, which is technology. Right now, the two things that she mentioned was information asymmetry and price arbitrage. How has technology cracked this?
Yeah, sure. So I think, like I mentioned earlier, Anupam, that what set us apart, even when we were like day zero or day one, right, is the technology platform. And that fundamental aspect of any digital platform is the information asymmetry removal, right, or transparency that we bring in to all the players who are looking at it, because the data is online and everybody is looking at the same data. So therefore, it is inherently transparent from the day one. Price arbitrage, I will let Shanti speak about it. But one other thing I would like to highlight as a digital platform is how we have built in security and of data, right? Because as you know, startup data as well as investor data is very, very confidential and very, and we need to safeguard it at with the most value, right? So we have showcased that we have been able to manage all this confidential data and protect it, and there has been absolutely full security provided to all this data. And recently we have also got ISO 27001 certification for information security, and all this to give us that stamp of approval that yes, our processes, our platforms, our security inherently built into our communication databases, everything is of the world standards or industry standard. So that is an
Very
important part
interesting.
that I want to bring it up. Yes.
Sure. Shanti.
Yes. So price arbitrage is basically, we ensure that whatever is the information related to the funding round is actually available to all investors at the time of commitment. So there is no lack of information, or there is no hidden costs or hidden numbers there, right? As well as we explicitly do some activities on the platform, right? So it is not like we implicitly make any assumptions on the funding process.
Sure. Now, like I said, this leads me to the next question, which is
Yeah.
private markets and public markets, right? Because public markets are places where both these things, which is information asymmetry and price arbitrage, are actually reduced to a very large extent. For example, when you're investing in a listed company, there are quarterly results, there are annual reports which are there, which are which are publicly available to everybody, not just shareholders.
Yes.
Price arbitrage, of course, is just not a thing because you have daily markets trading, there is liquidity, there is price discovery. I want to compare that to private markets. Of how do private markets and public markets differ? And of course, there's a small fact that in public markets you just need a very small amount to either start an SIP or to buy one stock. Whereas I believe in private markets, the situation is different. Walk our listeners through this. How are private markets and public markets different, and how do you see this?
So, Anupam, for this, let's take a step back, right? We will go to the basics of investing, right? Because I believe the basics of investing is similar in private markets and public markets. And that is a very, very key element, because a lot of people I know who are very active in public markets are actually very skeptical about private markets. They are like, no, I don't want to do startup investing because of the opaqueness about how they understand it. But if you take a step back and look at the fundamental pillars of investing, there are three pillars of investing, right? One is risk reward, right? Second is portfolio diversification. And third is access, right? If you look at the first of risk and reward, right? While we know that startup investing is a very high risk asset class, right? There is a very high probability that you could lose all your investments if you had not kind of worked through that in a very structured way, right? I think public markets also carry the risk, right? So I would not say that public markets don't carry a risk. So if you have not done your homework correctly, right? Or if you have not understood the dynamics of the market, public markets are also prone to risk. So the risk element is there in both private markets and public markets. Just that, of course, they are married to each other, right? So it is about if you have a high risk, you have a high reward, right? So that is the formula for the first point. The second point is about portfolio diversification. I mean, if even if you look at public markets, right, you have to do portfolio diversification for you to be able to create value on your investments. A very, very similar thing follows in private markets, where you cannot say that I have a 1 crore check and I want to write that entire 1 crore into one company, right? Because that basically means that you are just betting on one entrepreneur in this entire ecosystem. What we recommend is that when you start as a new investor in private markets, write smaller size checks and write it to multiple companies so that you are first understanding the way it is being evaluated, right? Because the way you would evaluate a private market transaction, you will understand those fundamentals as you start to write smaller checks, right? So that is the second part of it. The third part, I think, is where the difference comes in, is about access, right? Public markets have open access, like you said, there is transparency, there is open access. Private markets today, they are only accessible to accredited investors, right? So what happens is that the kind of investor who can play in a public market and a private market is defined by the regulator, right? So SEBI can allow a retail investor to play in public markets. Retail investors are not allowed to invest in private markets. So you have to be an accredited investor to be able to start investing into private markets. Right? So that is actually the fundamental difference. And what we have tried to do at Let's Venture is we have tried to solve the problem of access using a digital platform where we, get about 200 investors who come to our platform every month to onboard as an angel investor on Let's Venture. And we have a curation team. Our rejection ratio is almost about 40%. That is 40% of people who come to be an investor are not accepted on the platform because they don't meet the SEBI criteria of being an accredited investor.
And if I may ask, so what are these? Because you're referring to accredited investors. What is the criteria here? Just for our knowledge.
Yeah, so you have to have a net worth of 2 crores outside your primary home.
Okay.
Right? Plus, you have to have a particular criteria. Plus, you have to have like 10 years work experience, or you should have been a senior leadership, or you should have been a serial entrepreneur, right? So
Wow.
there is a monetary criteria and there is a profile criteria. Right? So you have to meet both of that to be able to then invest into private markets.
Very interesting.
And access is what we're trying to solve with Let's Venture. Assuming that the first two are investing principles, which will apply on Let's Venture also, right? But then what we've tried to do is, like before Let's Venture came up, right? It was very hard for you as an angel investor sitting in maybe Jaipur or sitting in Indore to go access a startup in Bangalore. Right? What Let's Venture today has done, again, this we have done with literally $0 spent on marketing, Anupam. We have got today 55 countries. We have 7,000 investors on the platform.
Wow.
And they have come to us by word of mouth, organic, referral, right? Because I don't think you can sell angel investing. Right? Angel investing is an asset class which has to happen through a understanding of that asset class, which typically happens through your first network, which will bring you in.
Very interesting.
Yes.
Great. So I'm going to wrap up this first half with the slightly hairy, slightly, shall I say, controversial question, because it's caused some episodes of pain. Cap tables and ESOPs. Right now, cap tables. I personally didn't have any idea what they mean till I had AngelList on my show a long time ago, and then I figured, okay, this is what a cap table is. I'm more of a public market guy who does SIPs and stuff like that. And then of course there are ESOPs, which can get a little bit dicey. There are enough stories floating around of friends who started a startup together and then had a big fallout because probably they didn't write their agreement in writing and stuff like that. So I want you guys to just tell me, where are these areas that cause problems in cap tables and ESOPs and managing this pool of capital? Because that's probably the most significant asset of value from the investor's perspective and from the founder's perspective, of course, other than their firm, because that pool of capital reflects the value of their firm. So tell us about these pain points. What are they? How do they happen?
Yeah, so very good question, and that is the prime reason why we built My Startup Equity. But let me first talk about the problems. And cap table, just to make everybody understand, it is nothing but at a high level a record of all the shareholders and their investments into the company or any startup, right? So that is what a high level cap table means. Though when you get into the details, there are a lot of areas that open up. And the fundamental problem with the cap table and how startups currently manage it is lies in Excel, right? I mean, everybody manages it using Excel, and that is where the problems begin, because cap tables evolve, right? You have raised a round today, you will raise another round tomorrow, and you will go through a lot of maybe some amount of convertible debt or security convertible notes and stuff, and all these things will need to be feeded into your cap table, and there could be errors because either your founders didn't have time, or let us say your finance person changed and new CFO came in who didn't know how to understand all the 10 versions of cap table the previous guy had built in, right? So all these problems creep in, and not to mention the shareholders who lose track of what happened when. And incoming investors also face this problem when they try to invest. They don't have a history of how the cap table evolved. So all this I'll put in a single word, that is single source of truth. I think the problem lies because there are too
Nice.
many players trying to manage, and there is no single source of truth for the cap table, right?
And let me understand that this happens because that's how companies evolve. Now, let's say that I'm a startup founder. I'm a single person, okay, and I start with maybe an angel round, so I reach my friends and family. Then 10 people come on board. Then once I am done with that, I probably go for either a Series A or a pre-Series A, and another 10 people come on board. And so the
Right.
number of people goes on multiplying, and you tend to lose track. Is that generally how these things happen?
Yes, that is how things happen, and it could be sometimes that you have fewer investors and it is easier to manage in Excel. But it
Hmm.
could sometimes very well be that the instruments are complex, or sometimes number of investors are large. We have seen companies which are like 50 to 80 investors on board
Wow.
across various rounds, right? So managing that and their investments and all their data so that it is accurately reflected in the cap table could sometimes bring in small chances of error. And like you, I think, yeah, I heard you say that the cap table and the equity is the most
Hmm.
important thing in a startup, right?
Yeah, yeah.
And any small changes or errors in this most important asset
Hmm.
can be crippling, can cause problems during your due diligence, can cause problems because of your investors are worried that you didn't show them the right data, all those things,
Wow.
right? And yeah, so the cap
Let's
table,
talk.
yes, go ahead.
Sure. No, go on. I mean, I was just going to say that let's talk about ESOPs and how, because the other side of the
Yes,
break, I want to actually come back and talk about how LV solves this problem for all of us. So let's just wrap up this part on the stock option side, the slightly more hairier
right.
problem. Yeah.
ESOPs, I believe, are a larger problem because it impacts a larger number of people, especially the employees, right? Which are very many, could be very many, right, compared to shareholders, right? So there, in fact, like you said earlier, many a times I have seen founders which rely on word of trust, or I have promised so and so employee at the time of joining that I'll give you so many options, but I'm too busy right now to take care of the paperwork. I'll get it done someday, and that someday never happens. Probably 2 3 years pass by, and only when the round of funding happens or an investor is pushing for it does it actually happen. So I think at early stage the problem with ESOP lies in the fact that the founder doesn't have time or sometimes even money, right? I mean, getting the ESOP paperwork done could cost you lakhs of rupees, right?
Wow.
And therefore, yeah, I think it's the legal guys, right? And you know how
So
lawyers can charge.
when you say lakhs of rupees, you're saying stamp duty and stuff like that, is it?
No, it's the ESOP needs a something called a ESOP scheme document or plan document. That is
Oh,
a
wow.
proper legal document. Something, if you are familiar with shareholder agreement, it could be something,
Of course.
something of
Yeah,
that
yeah.
sort, right? Though
So
exactly
there are
not.
lawyer costs and all that involved. Drafting costs,
Exactly.
lawyer costs.
Drafting cost is involved.
Oh,
Right. So, so then the founder, simply gives up on it at early stage and doesn't do the paperwork, and that is where the problem lies at early stage. Not to mention, as the company evolves and becomes large, where there are hundreds of employees having ESOP, there another set of problems come in, right? Because the Excel becomes very difficult to manage large number of employees, and there also HR teams can't keep coming and going, right? And their employees vesting data, their Sometimes employees leave and their ESOPs need to lapse. All that calculation, at the end of the year, they have to do accounting, and all that calculation becomes very messy and difficult if you have large number of employees. So there also at later stages, we have onboarded a lot of Series B plus startups, and over again seen the same problem, that at large number of employees, anything beyond 50 or 100 employees becomes very difficult for Excel to handle. And errors creep in. Definitely employees don't get a transparent view of their ESOPs. They are not communicated clearly when they have to leave, and when their options will lapse, when they need to exercise. All these problems. I could go on and on, but severe problems. Yes.
I get what you're saying. I'm going to wrap this episode on a very basic note. What they call ELI 5. Explain like I'm 5. Sanjay, tell me how exactly do options work? In terms of vesting, buying. Honestly, even I don't have any idea. Just give me those major action points and whatever dates. So-called. Let's say that I'm an employee who signs up to go, to join a startup, and I'm offered options. What are the 3 or 4 dates or pivoting points, so to say, which are important to me from an ESOP angle? And I'm offered ESOPs, and I accept them.
Sure. So, at a fundamental level, just to step back a little, ESOP is nothing but a option for you to buy shares at a certain time, right? And that how these options are, how do you get the rights to buy these options is governed in the grant letter that you mentioned, right? And that grant letter would specify, how many options you got, right? So that is the fundamental first point. Those options typically equal to number of shares. So if you got 100 options, it actually means 100 shares most of the time. And then how these vest, right? So vesting means when you get the right to actually buy these shares from the company, right? And these vesting schedules could be like, definitely India has 12-month cliff. So first vesting can happen only after the 12 months. After that, it could happen monthly, quarterly, depending on how the company chooses. So you could look at the vesting dates and how you get those vested options as a second parameter. And the third and the most important would be how and when are you allowed to exercise these, right? So even if you get vested options, doesn't mean that you can exercise immediately, and doesn't mean that you can buy those shares immediately. It is again governed by the ESOP document. So you need to go through that clearly and see how whether the company allows you to exercise, and how much can you allow to exercise. Many companies allow exercises to happen only at the time of liquidity event. So it's good and bad both for employees. But these are the main things that you need to look at. And not to mention, not to forget that ESOPs are a very important way in a startup to attract and reward top talent, and it continues to be. Many employees have benefited and made lots of money through ESOP. So it continues to be a very attractive model for startups at all the stages, early stage, late stages, to be able to attract top talent from industry.
Understood. Shanti, any closing thoughts here? This was a big topic, hairy topic, very controversial in its own way. Any closing thoughts? We're just about done with the first half.
Yeah, so ESOP is basically your way to offer non-linear wealth to your employees, right? And that's why it becomes so critical element in how you structure it and how you are transparent about it. So that is the closing.
I like the sound of that, non-linear wealth. That's what startups are all about. So folks, that is a wrap on the first part of this episode. We're going to come back and we're going to talk about LV's products and how LV solves the problems that we spoke about in this first episode. Don't go anywhere. We'll be right back. My guests, Shanti Mohan, co-founder and CEO, LetsVenture, and Sanjay Jha, co-founder and chief technology officer at LetsVenture. We'll be right back.
Hello, everybody. Welcome to another great week on the IVM Podcast Network. If you're not following us on social media, don't you think it's about time you started? We're IVM Podcast on Twitter, Facebook, and Instagram. I wanted to kind of just give a quick reminder to everybody. As I mentioned up top, we are doing our annual listener survey right now. If you could please go and take a couple of minutes out of your day and fill it out. We would really, really appreciate it. It's ivmpodcast.com/survey. If you're comfortable giving us your email address, we'll enter you into a random drawing, and we're going to be sending out swag to a bunch of randomly selected listeners. So do definitely get on board that train. Let me tell you a little bit about what we did on the network this week. We launched a new show called Zindagi Diaries with Ragini Kumar. Many of you might have seen Ragini on television during the IPL. She's a presenter, but she's showing a different side of herself over here with a poetry podcast. Give it a shot, give it a listen. Let me know what you all think. Vishal Gondal is back this week after a while. He's been on an extended break, but he has Rahul Narvekar for the first episode. Really interesting conversation. Do check it out. Raji Saman joins Gauri Devidayal on This Round Is On Me to talk about the wine business and what's going on there. We had a number of conversations about the Farmers Bill and the surrounding agitation this week on the network as well. Maruk Inayat had a great episode on the note. Pulia Bazi did a deep dive into the issues around this. And on Siders, we have our typical, fun conversation about this stuff with a little bit of a seriousness, a little bit of fun. Do check that out on Cock and Bull on Thursday last week. Akash Mehta joined us for that episode. And with that, let me get you back to your show.
And welcome back to this episode of Paisa Vaisa. My guest, Shanti Mohan, co-founder and CEO of LetsVenture, and Sanjay Jha, co-founder and chief technology officer at LetsVenture. In the first half of this episode, we spoke about startups and investors, how their equation works. We spoke about public markets and private markets. We spoke about information asymmetry and price arbitrage. And finally, we spoke about cap tables and stock options. All of these, if you're someone who's a startup or if you're an investor, if you're an employee working, I'm sure a lot of these would have made sense to you. Hopefully, they would have added some value to you. So in this second half of this episode, we're going to talk about how LV cracks the problems and actually provide some pretty good solutions. I mean, they've been here for 7 years. They've seen the entire startup ecosystem build. I'm pretty sure that they've got a reasonably good product. So, guys, Shanti, Sanjay, let's start with this. How does your platform protect both interests, founders' interests and investors' interests? I'm sure that there are a lot of common areas. How have you built this platform and what's it all about?
So, if you look at the process of fundraise, right, and we'll talk about it from the founder perspective and the investor perspective. So from the founder perspective, his goal is probably three things, right? One is he wants to get the fundraising as quickly as possible, right? Like really reach out to the right investors, get the entire process done in a very kind of defined time frame. So you don't want to just keep going on and on with your fundraise. That is one. Second is you want to have the option to actually only show your startup to select investors. So that is an option which is given to the founder, because we believe, like I said earlier, Anupam, we represent or we work for the founders. So we will do whatever is required for the founder to be comfortable at the time of fundraise. And we have a feature called stealth feature where you can actually choose the investors you want to showcase your profile to. Right. And that is a very powerful feature, because a lot of times founders know that there are certain angel investors who have invested in their competitors, and they do not want to have their information showcased or their pitching events, have those investors attend those pitching events. Right. So really from that perspective, the protection of data is also on the protection of information from the founder perspective. That is the second part. Now, if you look at the other side of the marketplace, now when you look at early stage investing as an investor, right, what do you want to do? You want to ensure that you are investing into a company where there has been a business due diligence done, where there has been the legal due diligence done, as well as financial DD done, right? Because at the end of the day, this is a long-term venture, and you want to ensure that the basic business fundamentals are in place. Right. So the business due diligence is typically done by the lead investor who's leading the round. And as LetsVenture, we have partnered with financial partners and legal partners to actually do the legal due diligence and the financial due diligence. Overlaying on this, right, LetsVenture also has something called the SEBI registered Angel AIF, where we now route all the investments of the investors through this one vehicle, which then sits on the cap table. Right. And there is a certain regulation requirement for you to be an investor who could invest through an angel AIF. And that is an accredited investor, as well as getting consent on every transaction you are participating into. So all these are, very well defined by SEBI. There is a very, very detailed process defined, and Let's Venture completely follows it to the T, right? Because at the end of the day, we believe that we want to do private market investments the right way, not the fastest way, right? So a lot of times, some of these take time, right? Like a financial due diligence and a legal due diligence might take a little longer, like it might take 2 weeks longer. We prefer to wait for those 2 weeks rather than say, it is okay, let's kind of jump this process and let's go and ask the investor to commit the money, right? So while the investor has showed the intent to commit, we don't do call for money till we don't have all the legal, financial, business due diligence signed off by the lead investor. And only then, after we get consent from the investor, do we do call for money. So that is the process, and this entire the workflow, right, is actually managed by the tech platform. And like what Sanjay had said, right, we are actually a technology first company, Anupam, right? So even when we built Let's Venture in 2013, we launched our technology platform in September 2013, and we did our first transaction in January of 2014. Right?
Wow.
Yeah. So we did not do our first transaction and then went and built the tech platform, because we
Yeah.
always knew that the only way to solve for transparency, efficiency, information asymmetry is through technology, right? Is when you actually create uniform access. If you are qualified to be an investor, and if the founder wants to connect with you, we have set up the platform to allow that process to happen.
Very interesting. Sanjay, can you give us a use case out here? Let's, I don't know, take an example of monthly P&L numbers and monthly metrics and all that. I mean, for us in the public markets, I say us because, like I said, I am more familiar with that area. We have quarterly results. How does technology have a similar thing on this side of the table, for founders and investors? I'm just trying to visualize a solid use case out here.
Right. So, for when investors are looking at a startup profile on our platform, there are a number of key areas that uh, we have put it out there, right? First and foremost is what is the problem and what is the solution that they are bringing, they are providing. What are the important team members, like especially the founders? What is their background, right? Then it goes into in the traction, what kind of traction they have built, what kind of metrics they are showing, right? It could be for a SaaS company, it could be ARRs, it could be churn rates, it could be lifetime customer value, all those things, right? And similar for B2C companies, right? What kind of daily DAU, MAU, monthly average users, daily active users you have, right? So all these metrics are there, and not to mention there will be data around your competition. Who are your key competitors, and how do you compare against those, right? Your business model, how do you make money, right? Then of course, if you have raised your earlier rounds of funding, then all those details. So bunch of this data, and all this data is put in a very secure platform and very secure way, so that it is accessible only to the investors who are supposed to be looking at it. And that is how we solve for transparency and information asymmetry. I would also like to add here that being a tech platform, it makes it very easy for us to acquire, or rather serve to investors who are dispersed all over the globe, right? And the fact that Shanti mentioned, about 1/3 of our investors are coming from 55 countries across the globe. That is the prime reason for that is having a tech platform through which they can seamlessly discover, evaluate, and not just evaluate, even interact with founders very, very easily and very securely.
Very interesting.
We also have a mobile app, right? So you can actually download the mobile app, and if you have a login to the platform, you can also access the mobile app, and then you can actually see the startup cards on the mobile app. You will actually get the entire information which is available on the web on the app, and we have seen about 40% of our commits actually coming in through the mobile app. So we do like about 500 to 600K of commits coming through the mobile app.
Very interesting.
Yes.
Sanjay, that's it. Last question. That hairy problem that we spoke about on cap tables and ESOPs. How does LP solve this?
Right, of course. So we have that is the prime reason we have built this product called mystartupequity.com, which is a SaaS product. It is supposed to be solving the problem of cap table and ESOP management. I think one of the problems I talked about for cap table is the single source of truth, right? And the way this product solves it is, brings all the stakeholders in one place, and they are putting their data in one place, right? So be it the founders who are talking term sheets with the investors, be it the legal guys who are putting all the details and clauses in the shareholder agreement, and they might have various terms like convertible round, pre-money valuation caps in the SHA. All this becomes codified and put into the single language, and that is the mystartupequity.com language, right? And that would be, let us be it the finance people, be it the company secretaries who issue share certificate. So everybody is working on the same platform, and therefore it really becomes a single source of truth for all the cap table information. That is number one, right? And of course, as companies evolve, and let us say if they use any of the complex securities like convertible notes, etc., or convertible debt, etc., it becomes very complicated, right? You need to look at how the new round would play out if the investment happens at certain price. Then it becomes a time consuming affair, right? Whereas in my startup equity, you can just click a button and say that you are raising this next round at 100 crore valuation, and it spits out the new cap table in just a click, right? So then it becomes so easy for you as a founder to go and negotiate the terms with the investor, because you clearly know how it is going to play out in your cap table. And then let us talk about the ESOP part, right? ESOP also, I think, number of problems I brought up at early stages. Founder doesn't have time or money to spend on building the entire legal paperwork for ESOPs, and we have completely solved that problem, right? At My Startup Equity, for early stage founders, almost for practically for zero cost, you can actually get a customized ESOP scheme document right in a matter of minutes, right? And you get it approved by your shareholders, and maybe in a day or so, as soon as you get it done, you are ready to roll out your grants, formal grants, with all the proper legal backing, all the signatures built in. So no need for anybody to rely on promise of giving ESOPs, right? Do it from day one. The moment you promise, moment you can come on My Startup Equity and do your proper grant letters. No need to delay it any longer. For bigger startups, right, of course, as the company scales and they are doing hundreds and thousands of employees with ESOPs, I think a product like My Startup Equity would solve for it by inherently being scalable in nature, right? What works for 10 employees, same thing works for hundreds and thousands of employees. And not just for HR teams, also for founders, also for finance teams, who can now get the entire year's worth of ESOP expense downloaded in a matter of click, and just with a click, right? And not to forget, the employees get a seamless, transparent access to their entire ESOP grant, when what is going to vest, right? And most importantly, the one thing that we have clearly mentioned to each of the employees when they log in is, what is the current worth of your ESOP? Go and ask that to any of the employees that Anupam, and you will probably not get that answer very clearly. Like, be it early stage, or be it even a unicorn employee, right? But we have provided right upfront, right there, so that every employee has access to what is the current worth of that ESOP, and that of course will change, right? That of course will improve, or most likely improve, as that company raises different rounds of funding. So all this solution put together, and not to forget, all this comes at a very, very convenient and startup friendly price point, which you can go look it up on our platform, on our website, right? mystartup.equity.com.
Very interesting. Guys, we are done. Any closing thoughts? Anything that I have missed? Just jump in and tell us.
Thank you for having us, Anupam. I think public versus private market debate is very interesting. And I think it is a myth. I think there are a lot of similarities, and we would love to, start having more conversations around that.
Yeah. Oh yeah. I mean, I've I would love to have you guys back, right? Because in the end, it's rate of return that matters there. I mean, whether I get it in this way or in that way. And of course, as you correctly said, portfolio diversification. That really is, you put all your money into the stock markets and then you have something like what happened in March. You never know. Whereas private markets that way are illiquid, but then illiquid also protects your price, right?
Yeah, we also believe
Right.
that
So
I
for
think
that same
today's
reason,
times, you don't have an option not to invest into private markets. I think you have to keep aside about 2 to 5% of your allocation because private markets globally have become bigger than public markets.
Sanjay, you were saying?
Yes.
Yeah, I was saying that, for the same reason, our kind of overall vision for LetsVenture has changed from, or rather moved to become, organizing private market or private market investing made easy. So as an investor, you can log into LetsVenture and you can not just invest, you can invest into early stage, you can invest into growth stage, you can even invest into unicorn startups, right? And that is amazing. So we give you opportunities to invest in any of these class of startup investments. We even have, you can even invest into as an LP into some of the leading funds, right? Also, all that is investment product. And underlying all this is our My Startup Equity product, which becomes an infrastructure or kind of a cap table and ESOP layer for all the startups to utilize. And this becomes a platform on which we will be able to run more funding transactions.
Makes sense. And I think that, while not all of us have 2 crores to invest and maybe might not reach that accredited investor status, but at least for those who do, I'm sure your product makes sense. For those who don't, well, startups employ a lot of people, and a lot of them are also eligible for stock options. Stock options, I think, also they do form a fairly significant part of remuneration, right, guys?
Yes.
Yeah, so I'm sure that whatever you've spoken about the ESOPs, that is also helpful, even for those who are working, say, for startups who have bought your product. I'm pretty sure that should be helpful for them. So, folks, that is a wrap on this episode of Paisa Vaisa. My guest, Shanti Mohan, co-founder and CEO, LetsVenture; Sanjay Jha, co-founder and Chief Technology Officer at LetsVenture. Shanti and Sanjay, thank you so much for doing this for our listeners.
Thank you so much.
Thank you, Anupam.
And listeners, if you like this podcast, don't forget to check out other interesting podcasts on the IVM network. You can listen to us on the IVM Podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcast on Twitter and Instagram. If you want, you can reach out to me. I'm your host, B50 on Twitter. And thank you so much for listening to Paisa Vaisa.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
What are some of the radical changes that are now shaping our workspace? With physical distancing and heightened safety protocols being the norm, will technology finally make its large-scale entry to the workspace? Will design as we know it change for the long term? Is it possible for the Indian commercial real estate space to adopt a 360-degree approach to sustainability? Join our hosts at the Future of Space podcast by RMZ as we deliberate with industry leaders, analysts, and bright young minds on the way forward for the workspace given the new COVID normal. Tune in to the IVM Podcasts app or wherever you stream your favorite podcasts.
जिंदगी डायरीज के पन्नों में कुछ पुरानी यादें, समुंदर किनारे झूमते दरख्त, जवान दिल की धड़कनें और अनजान मुलाकातें हैं। तो आइए खोलिए मेरे साथ जिंदगी डायरी के पन्ने और साथ ही एक साथ खुलकर जीते हैं जिंदगी। आप सुन सकते हैं जिंदगी डायरीज IVM पॉडकास्ट ऐप या वेबसाइट पर, या जहां कहीं से भी आप अपने पॉडकास्ट सुनते हो।